Over the past couple of weeks, you have seen a political tussle over the division of monies between the states. The southern states felt they were being penalized for their success, while the Prime Minister said the southern governments were creating a north south divide. Various debates on TV from either side were throwing jabs at each other, cherry picking statistics, and even misrepresenting some statistics to show their argument in a good light. In all this shouting match on TV, the real questions are lost. Are the tax devolutions politically influenced? Why are states so dependent on the union government for monies? Are there deficiencies and discretion in the devolution of the tax monies? What are the other amounts nobody is talking about? Is the center keeping too much money to itself? Are the states doing a good job of raising and spending monies? There is this term called principle of subsidiarity. This is a principle that says a central authority should have a subsidiary function, performing only those tasks which cannot be performed effectively at a more immediate or local level. This clearly means we should be spending more time talking about what affects you and me the most. The road in front of your house, the water you get, and the air you breathe. Who is responsible for that? Which government is empowered to do that so you can actually go out and be economically and socially productive? Let's talk about this north-south divide with an expert. We speak with Pranay Kotasthane. He is the Deputy Director of Takshashila Institution, an independent center for research and education in public policy. He teaches topics in public policy and international relations and public finance at Takshashila's graduate and postgraduate programs. Pranay, thanks for coming on the show and talking about this issue. Basically, I want to understand from you, what is this fiscal federalism? How do you kind of define that? And why is that important? Isn't the country running fine without all these words called fiscal federalism? Why is that important?
Yeah, thanks Satya for having me. Always good to be back with Takshashila alum and their interesting projects. So first of all, let's begin with this idea of fiscal federalism. See, the idea is that India is a union of states and the constitution has certain specific mandates for the union government and the state governments and now the local governments as well, right? So there are a bunch of responsibilities divided in the constitution as union list, state list, and concurrent list. So federalism relates to how this relationship between the states plays out, between the states and between the state and the union, and also with the local governments, etc. Now, fiscal, there are various dimensions of decentralization. Okay, one is fiscal, one is political, one is administrative. So when we are talking about fiscal, we are generally talking about how money is managed between these different levels of government. Okay, so this is broadly what it is. And there's a difference between decentralization and federalism. Federalism is when these responsibilities, etc., are semi-permanent in nature and they cannot be easily extinguished by higher level governments. For example, China is very decentralized. China is one of the most decentralized places, but it is not federal in the sense that tomorrow Xi Jinping can say that I don't like this particular state government and I'm not going to give money to you because I don't like the governor of that province, etc. And it is fine. It can happen. In India, it shouldn't happen because federalism is a permanent part of our constitution and the DNA of the Republic of India. Federalism is also part of the basic structure of the constitution. So if an Indian PM were to do what I told you about Xi Jinping doing, a state government can challenge it in the Supreme Court and the Supreme Court will probably uphold it in the state's favor because it is violating a basic principle of the Indian constitution. So that's the difference between decentralization and federalism. And fiscal federalism is when we are dealing largely with how monies flow from between states and from the union government to states and from states to local governments and so on and so forth.
So theoretically, we do have political federalism which can be extinguished, right? So governor's rules is one way of saying this state has failed to do something, the government goes away, and the president's rule is imposed on that through the governor, and do that. Is even though, but like you said, it can be challenged constitutionally, saying, "Hey, why did you do that?" Something like that can be done. So against the basic structure, the Supreme Court is possible it will uphold that, and it's not easy to do. It's not as easy as China, is what you're saying. In the fiscal side of things, are we truly federal? How is that achieved? What gives us that concept of federalism on the money side of things?
Yeah. So again, I want you to think in terms of this as a spectrum. So there is nothing like a five parameters which will make a state fully politically federal and one which will not make it politically federal, right? So it is a spectrum, and India's history itself says that on the political federalism side also we've moved across the spectrum, right? So in the 1960s, etc., it was largely party federalism, right? One party was effectively controlling governments in most of the states. So whatever federalism used to happen inside the Congress party, right? Not in the politics outside it. Then we moved to a phase where there was lot of these governor interferences, etc., and Article 356, 256 being used very easily. Then we had the SR Bommai judgment, after which these kind of governors dismissing state governments was restricted. So now we also have moved along that, right? These are lived experiences of a republic. So states can change, they move along it. So similarly with fiscal side also, there have been phases of it, right? So earlier when India began, there was this idea of the fact that state governments have specific areas in which they can raise taxes, and they also have specific expenditure responsibilities. Whereas in union government also similarly, they have some tax ways in which they can collect money and ways in which they can spend money. Now the architecture was such that largely the money which was collected with the union government will be more than the expenditure responsibilities that are with the states. Now, why is that the case, right? So, roughly today, 60% of all expenditure happens through state governments, but all the money that comes with the union, with the state governments, is around 38%. Right, so there is a 22% gap, right, which needs to be given to the state governments from elsewhere. Now, why does this happen? Right, this happens because Constitution imagines that core social infrastructure should be provided by the state governments, which is health, education, law and order. Why is that the case? Because the government which is closer to the people will probably understand their preferences better, right? So that's why you want Karnataka government to decide what should be the education system here, like, and maybe should Kannada be taught, etc. All these are decisions to be left at a lower level of government rather than in Delhi, right? So by definition, these are the things that we are talking about now, right? Social infrastructure, etc., are important. So they are with the state governments on the expenditure side. On the income side, all the sales tax, etc., which used to happen, advertisement revenue, etc., are with the state governments. But the large income generating sources are with the union government, right? They're collected at the union level. So essentially two, income tax and corporate tax, right? And why is it with the union government? Because if it were to be left to the state governments, then you will have beggar thy neighbor policies, right? So one state will just say, I don't want to improve the infrastructure here. You company, you just come here because I'll give you 5% tax rate. Whereas, so all states will compete for the minimum, and eventually you will have a situation where no one is trying to improve the things that a business gets, but just playing this game of reducing taxes. That's why you need money to be collected at the union level, and then it is distributed by some mechanism. Now, when the Indian Republic started, the idea was there is something called the Finance Commission, which is a constitutional body which decides how the money collected by the union government through income tax, corporate tax is distributed between states and between the union government on one hand, and how it is distributed between all states as well, right? So this was the idea. But as you can imagine, this was not how things went, because that was a planning era. So the idea was there was this non-statutory, non-constitutional body called Planning Commission which came up, and the Planning Commission said that the union government will also decide the plan, 5-year plans of how this country should be run. And in fact, the finance commission of the finance minister at that time resigned, because they said, like, what the hell, like, why is this body coming and telling me how the finances should be run, right? So we had this extra constitutional body which comes up, and it decides all the priorities of the union government, and it also decides how the money should be spent. What So there was, every state used to get some money under plan grants. So these are the money that state governments will get to follow the plan that the union government has set, right? So in that sense, we moved away from fiscal federalism. But now, over time, there were many changes. But to cut a long story short, now with the abolition of the planning commission, in a way, we got more fiscally federal, because now the finance commission is the only one which is deciding how the pot of money is shared between states and union government. And then the money which the finance commission gives, these are not tied to any plans, these are unconditional. So today Karnataka can take that money and decide that it wants to spend on, I don't know, Mysuru as the next Bangalore, I don't know, it can decide. Whereas Kerala can use the same money to spend on health. So it's completely more federal in that sense, that states have more power now to decide where that money goes, and they don't have to follow one plan set by the union government. So this is a big picture understanding that we need to have. Otherwise, it get lost in smaller details of what is happening yesterday and day before.
Excellent. So there's this pot of money. Let's get to the pot of money which are the receipts that the Consolidated Fund of India, or whatever you call is their bank account, where all this money comes in: the income tax, the corporate tax, the GST, and whatever else is there. Now, on how is this divided? So I just mentioned three. Can you tell me what is this? I've heard of this term called gross receipts, right? What is this term? How is this pot of money arrived at? And we'll get to the distribution. Can you tell me how it is arrived at? What is this pot of gold money?
Right. So I think, I wish it were a pot of gold also.
I wish it were. But, yeah. We are arguing like it was.
Yeah, the way you have to think about it is, again, for anyone listening to this, go to the Constitution of India document, go to the schedule section of the Constitution of India, and there is a schedule which decides what is under union list, what is under state list, what is under concurrent list. In each of these state lists, you will see what are the places in which they can raise money and what are the places where they can spend money. So it is a big misconception that we have, that all the money goes to the union government and then comes back. That's not how it happens, right? So like I said, there are certain things which are there with the state government. Okay, so you can think of this broadly as the income of any state government will be broadly divided into two things. I'm simplifying it, but for our learning, one will be the revenues, state's own revenue, it is called. So it can be made of two things: one is tax revenue, one is non-tax revenue. So what goes in this tax revenue? All your SGST, anything tax on expenditure that you're doing is under SGST. That money does not go to the union government, right? So if I buy your product, Satya, and we are both in Karnataka, only SGST and CGST will be charged. The SGST portion directly goes to the state government, and that it spends however it wants to. There is also non-tax revenue for the state government. So, for example, it levies a fine on, let's say, there's a state highway. It collects money for usage of that state highway, toll taxes, etc., fines, toll revenues. Those are all with the state governments, and it just gets distributed to the states. Okay, so this is broadly how states' own revenue is. But as I told you, states' expenditure requirements are always higher than the total revenues that they get, and it is not just a feature of India. Most federations are like this. Okay, states, because of the problem which I told you, beggar thy neighbor policy. So broad taxes are always collected at the higher level and then distributed. So then, to make up for this difference, union government has to give some money, right? So that is what comes as two forms from the union government. Those can be in the form of either grants for which are tied to specific expenditure items, and those are called specific purpose grants. As the name suggests, they are meant for a specific purpose. The other kind of money is called general purpose grants. As the name suggests, they are unconditional. They are meant for any purpose that the state governments might deem fit. So the Finance Commission, most of the money that comes through Finance Commission. So the money with Finance Commission is essentially the two broad things I told you: corporate tax plus income tax. Whatever tax filing you do on 31st March, that is the money which is being collected by the union government. Okay, and same with corporate tax, you will do that, and that money is then decided. There's a Union Finance Commission which gets constituted every 5 years. As I said, it's a constitutional body, and it decides a formula to share this money between state governments and all states, between union government and all state governments on one hand, and across state governments on the other. So that's what we call vertical versus horizontal devolution. But that's what the Finance Commission decides. On the other money which comes from the union government to the state governments is, as I told, specific purpose grants. So state union government also has many schemes running. So for example, there is a national health mission running in Karnataka. Right? So now this is a centrally sponsored scheme. So what it means is that it is designed by the Ministry of Health at the union government level. Technically, they shouldn't be doing this because health is a state subject, right? Public health is a state subject, but no state government challenges this. So union government has decided that it wants to do something on health. So it will have some money. So for National Health Mission, for example, for most big states, 40% of the contribution is made by the government of Karnataka, and 60% of the contribution will be made by the union government. Right. So this is what is decided at. This is the specific purpose grant which comes from the union government. That's the second source of money coming from the union government. So this is broadly on the revenue side. There are other things about debt, etc., which states governments also raise, but I'm not going into that because that doesn't tie so much with what we are discussing.
Correct. So in this, I have a few questions on the GST itself, right? GST is also a source of revenue. Like you said, SGST strictly goes to the state, but it is not collected by the state. It's collected by the GST Council and then given out to the states. One of the controversies there was also that SGSTs are not being given out on time. Is that timetable or is that discretionary? It cannot be discretionary because it has to be paid out. But I've also heard that there was one promise when we moved into the GST regime that if your GST collections are not growing at 12%, I will give you some compensation for that. And they were saying it's not coming on time. The only complaint on the GST thing seems to be it doesn't seem to come on time and it is not coming as promised. And is that because GST is collected centrally and then given to the states? It's not like it's going directly into the bank account of the state coffers, right? It's probably collected and then distributed at some point in time. Is that understanding correct? And second thing is the GST that the CGST that goes in, does that add to the pot of money, or is that kept separately? Is that considered as a part of the pot of money that the FC devolves, or it's not and it's separate and it's accounted for under a different account? How does that work?
Yeah. So I'll answer your last question first. Yes, it is a part of the general money which is with the union government, and that gets devolved according to the Finance Commission formula. Okay, so it is not a separate thing. It just gets added to the income tax, corporate tax, plus all the CGST amount get added in one pot of money, and that is divided according to the Finance Commission formula. So yes, that the first one. See, the problem is not so much with SGST. That's not the issue. SGST comes to state governments, fine. The problem comes with one, IGST, which is when intergovernment transfers happen, and second, the compensation cess which you mentioned, right? So the main problem has been with the compensation cess because remember, because GST was a political reform, you had to get states on board. Many states which were producing powers like Karnataka, etc., they said, like, what is in it for me to get into this new system, because a lot of economic activity is happening here. So the compact that the state governments and union government entered was that we promise you a 14% increase year on year for a fixed number of years. And if the actual collections are below that amount, we will make up for that through this money which we collect through a cess called the GST compensation cess. So that was the design. And from the money which used to supposed to be flowing from that, you saw during the pandemic, the collections were down, and the money that the state governments had very legitimately said that we entered this compact because you said this 14% year on year rise. So if the union government has made that commitment, it should live up to that commitment, right? So that was the major challenge. I think now it has been more or less resolved, but that's where we are.
Fair enough. So now let's get to the distribution of this whole thing. You said in this pot of money, the Finance Commission takes the entire pot of money, and then it says, okay, this much amount is kept with the center. Over the past two finance commissions, the 14th and the 15th, I think it was remaining around 42 and 41%. So 40, let's take the current finance commission, around 41% of the entire pot of money is kept with the center, right?
No.
What is that? No. How does that distribution work?
Okay, let's again go back to any very simple terms. So union government is collecting corporate tax, income tax, and CGST. Broadly, there are others, will not go into decimal places. So this is the money, this is the so-called pot of money with the union government. From that, two things are deducted. One is the cost of tax collection, because there is a union income tax bureaucracy, all that will be a cost. It's not a significant amount. And cesses and surcharges. So cesses and surcharges are specific, specific purpose money, charges which union government applies, and surcharges are taxes on taxes, and these are not distributed with the state government. So you have to deduct from all this money two things: cost of tax collection and cesses and surcharges, which have been increasing in the past 4 years.
How much is that? Is that significant or is it decimal?
Yeah, it is significant. Now it is almost coming up to 10% of the gross tax revenues, approximately. So we'll come to that number, but just to close on this, so you remove these two parts from the tax collected, you get something called the divisible pool. Correct. As the name suggests, it can be divided between union and states. Now, when the 14th Finance Commission recommended, it said 42% of this divisible pool goes to states, which means the remaining 58% is with the union government.
Oh, okay. Right? I got it all.
And so it's the other way around.
Oh, okay.
And then in the 15th Finance Commission broadly kept this number same, but because J&K became a union territory, the money should have been kept with the union government. So 42% became 41%. So 41% is what goes to state governments. And then there is another formula which decides how it is split between Uttar Pradesh and Madhya Pradesh and Karnataka.
So now that we say that the majority of the amount, only 41% of the divisible pool is now available for distribution to the states, the Finance Commission arrives at a formula. There are various things in that formula. There's something called equity, which is based on income distance. Then there's forest cover and all those things. Then there is also total fertility rate. They call it the demographics percentage, which is around 12.5%. So let's focus on this equity, so-called equity and income distance, and this demographic portion, which is around 12.5%. Are these the significant components which seems to be causing controversy? Because explain to me this equity and this demographic and performance or whatever it is. How do you define these two, and why is that important to the conversation?
See, so what is the purpose of this Finance Commission, right? So remember, as the states get richer, the best form of design is that the richer states should be able to raise most of their money on their own, and they shouldn't be dependent on the union government. That is what we want, right? Like, we don't want state governments to be dependent more and more on the union. They should have more freedom to decide their priorities. So in any republic, any federal system across the world, as you become richer, your dependence on grant reduces. So I had done this analysis in 2015-16. We saw just about 15 to 20% of the total expenditure, the total budget size of Karnataka was coming through all these grants from the union government, specific purpose or general purpose. Most of the money was being raised in Karnataka through what was earlier SGST, right? Sales tax, etc., and our non-tax revenue. So it's fine. Like, I mean, it's okay, right? We are able to get that money inside the state because there is more economic activity here, more money is being generated in GST, etc. So that was what was happening. That's an important point to keep in mind. Now, the challenge before Finance Commission is to decide how should this money be divided across states. Once they have decided how it is split between states and all states and union government as a whole. So this is what is called the horizontal devolution formula, and there can be many parameters in it. So Finance Commission is a body generally of highly qualified experts who are administrators or economists, and the good thing is it is largely been able to maintain its non-political or non-partisan non-partisan credibility, and most state governments and union governments accept their main recommendations. That's a big achievement in fiscal federalism. Imagine if there were protests every time the union government didn't accept it didn't accept Finance Commission's recommendations at all, like it has happened in Pakistan. They have also had the same design, but many times the government has not accepted what the Finance Commission. That doesn't happen in India. So in that design, there obviously you have to take into account many factors. One factor is the union government should probably give more support to the places which have more people, right? I mean, obvious, right? So that's why you have a demographic formula that has some weightage. Now, weightages can change, and I don't think there's any scientific formula for that, right? You come to terms with it based on the discussions that the Finance Commission has, the past information and the requirements, etc. So there are some parameters which define the need of a state, some parameters which define how well the state is doing, that is fiscal performance, etc. And there are some parameters which also decide the revenue raising capacity of the state. So any formula will have to do a balance of all these three. You can't have one formula which decides all of that. Now, on the demography side, for a long time we were using 1971 based formula, the population of the 1970, which seems very silly, right? You want to provide for people in 2023. Why would you use the population formula of 1971? How does it make sense at all? So largely now now the finance commissions have moved to taking into account what is the population today. Now this can also work in favor of states which are actually accepting more people. So for example, I would say states where there is more incoming migration, they should be rewarded because they are providing an externality for the entire country, right? So it can be thought of in that way, but it is not the common notion as we discuss in outside this forum, right? So generally people will just say, okay, why is that population of that state increased so much, so you should penalize them. I mean, we are far away from the population explosion idea, and Finance Commission is not population planning commission, right? It is not meant to reduce population. So anyways, there's some formula for addressing this number of people in that state. The second formula, part of the formula, you have to decide also, like I said, the purpose of general purpose grants in some way is to provide comparable level of services at comparable tax rates. So if you want to do that, states which are poorer in some sense need to be enabled, nudged more, such that they are able to be better in and reduce the gap which exists, right? So that is what comes through the income distance formula, and this is the biggest parameter in how in the weightage given to this is the most. So for example, in 14th Finance Commission, it was 50% of the weightage was to income distance. So income distance is very simple. They will take the GSDP per capita, the income per capita of all states, and the distance from it is one important parameter. So the poorer state will be the most distant from the richest GSDP per capita, and hence it gets more support. So the richer the state, as I said, Goa is the richest state, so Goa doesn't get much part of this weightage, right? Income, it fares badly in the income distance part. But then there are other parameters also which are used, say forest cover, area, etc. Other different finance commissions have different formula weightages, and they decide finally how this money is split between various states. One thing to remember is no government, state government is going to be happy with any formula that you bring, right? It is a political exercise. Every state government will be unhappy with this. It's like an umpire in a cricket match, right? So will always be have grouses against an umpire. That's the way it operates. But largely, income distance is a very important parameter which is used.
So it comes back to the question of the accusations that are being thrown. It seems to me that some of the politicians are claiming, "Oh, I have no influence on the Finance Commission. It is a formula, and we don't get to influence it. It is non-political." But it is also political in the terms of references being set, and you need to cater to the population numbers. There seems to be this little bit in the opinion space. Let's dab into it. It seems to me that a lot of the income tax, GST rewards consumption. Of course, at the end of the day, when you consume, you pay the tax, and you're getting the benefit of it. But a large number of jobs that are being created by the states and the competition for creating jobs. Right now, the only income they have on creating jobs is stamp duty on the real estate itself. So they'll get money if they build more buildings, other than all the tolls and advertisements and other things like that, which also is possibly municipal. The state seems to be encouraged to not create jobs, but create more real estate alone, because they know that if it goes into the divisible pool, a large percentage of that is going somewhere else. Just a theoretical construct from my side. It may not be the argument in general, but it's a point to consider is, could the income tax be divided in such a way, like some countries have, is that some of it can be split in the form of a CGST, SGST equivalent, where some of it can directly go to the state, so they're incentivized to create more jobs. Be that as it may, you already told me that the revenues that they can derive by themselves is not equivalent to the expenditures that they are listed down to do. Right? So is there a possibility of relooking this income tax in income distance in that light? Because it seems to be that the populated states are being rewarded more for being populous. Like I was just looking at that, the population growth rate of Tamil Nadu and Karnataka are around 75% and 109%, whereas UP and Bihar from 71 to 2000 level seems to have grown 138 and 146%. Now, I'm sure people would say, why are we continuing to reward people who are continuing to grow in such a way and are not doing anything to actually be competitive enough on the population side? While you claim that Finance Commission should not fix the population problem, it's not their issue. But in the TOR, if you continue to say that it is okay to reward people, it's a tax at the end. There is no quid pro quo. You have to be able to support. But is this indefinite? Because I see the same thing. If you did a 2021 census, which is not there, that might be different as well. So there's another question in this. There's just too many questions, but take this as well, because the quality of the data is also suspect. The GST piece, people are questioning that. The census is not being done. 2021 census has never been done. So I don't know when it is going to be done next, or there's a different way of doing that. So there's a lot of data. There's a lot of suspect data floating around. Do you think it is suspect? Do you think it is okay to do this? Do you think it's okay to continue to reward populations on the same way, or should there be in the 16th Finance Commission a relook, because that's coming out October of next year? Should they relook these population numbers to kind of not make the southern states feel that they're just continually over different finance commissions continuing to subsidize this unchecked population growth?
Yeah. So first of all, there is no unchecked population growth, right? The total fertility rate of India is declining steadily in all states. There's a great report by the Population Foundation of India, just India's premier think tank working on population related issues. So every state's TFR is declining. Most states have already reached replacement rates, and even in say UP, Bihar, TFR is declining, right? So one, no state is doing that. Second, see, population and people is a very personal thing, right? Like it's about me, my family, etc. It's not a decision which is happening at the state government level. It's not as if, I mean, say a CM of a state says, have more kids because I want more money for from finance commission. I mean, no one makes that argument, right? Everyone, it's a personal decision people make for what they think is the right thing for their family. And everyone in India understands now that having 10 kids is very difficult. Everyone wants to provide for education of their kids, and education comes at a cost, health comes at a cost. So, I mean, it's very patronizing when we think in terms of that, these states are not doing something and hence we should penalize them or something, right? I mean, it's actually people we are talking about. Don't think in terms of this abstract entity called state. So that is where I think, and see, what we are discussing is always a question with respect to finance commission. So all finance commissions meet every state government. They meet all the union government departments as well, and all the state governments present their views to them, and finally they have to come up with one particular formula which mollifies all states, or at least disadvantages everyone equally, says that they accept it, right? It's finally something, preferences have to be met, trade-offs have to be made. So they do consider this issue. So the way I would think about it is, don't focus so much on the population part. Every state is doing that. And I mean, then obviously think about it. Sikkim and Goa can say, why is it that Tamil Nadu gets more money? We have, Tamil Nadu has so many people. We have so few people. We have protected all our forests. Tourists come here, give us more money on that. So why are you taking? So these arguments can be made by different states in different ways. You cherry pick the number which works for you. That's what every state government does. And they try to position themselves as that you use this in this formula, give more weightage to this and don't give weightage to etc. So this is how the negotiation works. But trust me, there's no one formula, right? There's no one way to resolve this. So that's where we are now thinking of, is one state subsidizing the other? Yes, richer states always subsidize the poorer states. That's how it generally happens in any federation. Okay, it's not just about India. Now, what you would want to happen is that in public finance, a good principle is that there should be maximum overlap between these three circles. Think of this as a Venn diagram. Those who benefit, those who pay, and those who decide. The more the overlap between these three circles, the better policies that you will get, right? So, for example, if there were a mechanism where you can contribute 1 rupee to fixing the bad road in front of your street, that would be the best kind of formula, right? Because you are actually contributing money to changes happening in front of your street. So the connection between these three circles is the strongest when that happens. Now, when will that happen? That will happen when local governments are strong. Our local governments are completely broken. You have to think of that level. Once that level improves, a lot of our these questions will improve. Like the things that we talk about, right, are not about the state government level. I mean, Karnataka has 6 crore population. See, that's more than many countries. It's not possible for even the CM to know your problems in Bommanahalli or some other place, right? It will only be possible at the level of the ward councillor at that particular ward. But that is what we want to strengthen. But our lot of discussion is at the union state level, etc. So my contention is, don't focus so much on the horizontal devolution. There will be some, you have to go and tell the finance commission a story which suits your state. They will come up with some formula, but that formula will still never be in a way that it says give more money to the richer states and give less money to the poorer states. That's not the purpose of the finance commission, right?
Correct. But that would be less of a question if more money was kept by the state. And that brings me to the next question. What have the states been doing with their own finance commissions? Aren't they also supposed to be devolving further? They had the 73rd and the 74th Amendment, regardless of whether it was a shall provision, may provision, and it is not strong enough. They have the opportunity to raise better revenues. Is it a better fight for them to go and say, can I keep some of the income tax and some of it? Can we split that up and see if I can get more money there directly, and possibly continue to give you and not worry about getting these things back, and you can take that as the devolution the way you want? Are the state governments first failing to raise the correct revenues? Are they incentivized on the right side? Like I mentioned, income tax was just one thing that was the top of my head, is that you're not incentivized to create jobs if all their taxes are going somewhere else, right? Even if you don't even get a small percentage of that. Be that as it may, they're not doing a good job of raising the revenues. They're not doing a good job of, even in my opinion, devolving further. What's the story on State Finance Commission? Why have they been so lax? That is also a constitutionally mandated thing. Why aren't they doing that?
Yeah. So, I mean, the great statement about this is everyone wants decentralization up to their own level. This is what Raja Chalaya said. So, that's what it is, right? The state governments will say union government is not doing, and state governments will not do the same at the level. But before coming to state finance commissions, Satya, one important point is one, you will need to have some form of, say, fiscal performance as part of the horizontal devolution formula. That sort of helps all states. You want to reward the states which are doing well on fiscal performance, so that can be one, but it will be some weightage, right? It won't be 100% obviously.
Yeah.
Second part, I think, where a state government should be actually joining hands together is on the vertical devolution formula, right? So as we began with, 60% of the expenditure requirement is at state level, but only they are able to raise 38% of the revenues. 22% is coming from the union government. Why is it 22? Why can't it be more, right? I mean, why can't it be less, in the sense state revenues are directly more? One way to address that would be that 42% devolution. Why is it 42% of the divisible pool? Why not 45%? Why not 50%? This is the argument I think state government should be making, because right now all the contest is that there is one pie, and you have to, it's about how does it get divided between UP and TN and Karnataka. But the reality is that pie is itself is shrinking or not increasing the way we want, because you are, the divisible pool, remember, is total taxes collected at the union, which we discussed, minus cost of tax collection, minus cesses and surcharges. So over the years, past 5-6 years, what has been happening is, after the 14th Finance Commission said you give from 32% of the divisible pool, you make it to 42% of the divisible pool for the state governments. The union government found a way to subvert this in a way by increasing cesses and surcharges, which are almost 10% of the gross revenues, right? So effectively, that 32 became 42, and it didn't rise to 42 at all. And we've done some calculations, it is still 33-34% in reality, because you increase cesses and surcharges. So my idea is that if the pot has become smaller, you can divide it thoda idhar, thoda udhar. It's not as if you are going to make a big difference. But if that pie itself increases in size, all states benefit. Then, so my argument to state governments is actually challenge the state government, union government, on why is the cesses and surcharges being raised? What is, and if they are raising cesses and surcharges, make it a part of the divisible pool. Constitution wise itself, also the cesses and surcharges is a very grey domain. It was meant for some emergency funds, etc. But union government just levies it on anything it deems. Imagine it does a health and education cess. Health and education are responsibilities of which government? They are responsibilities of the state government. Why is union government raising a cess? Completely not federal, etc. So the activism, etc., to me, should be on this point. But it is a lot about one state versus the other. It's like I always call it that the monkey and the cat's fable. Remember, like there was the story, right? There are two cats and a monkey, and there is a roti which needs to be divided between the two, and the monkey will get the two cats to play against each other. Essentially, that's what happens today. But my argument is that think more broadly about increasing vertical devolution instead of fighting over how much one state gets against the other.
So sticking to that union piece again, what do you think it could be? Because I know there are responsibilities on the union government about defense and other things. The grant funding, does that come out of the union pool, the specific purpose grants and the general grants? Does that come out of the union pool, or does it come out of the divisible?
Yeah, so divisible pool is then divided in like 42% of that 100 rupee will go to the state governments, and the remaining 58 will be used for everything that the union government does, right? So it will be
and apparently around 36% of that or something is going into these grants which the ministries take and give out as schemes and other things, right?
Correct. So I don't have the exact numbers with me right away, but all the ministries which are there in the union government, some of them are obviously working with state government related. So NREGS will be run. There will be National Health Mission, Education Mission, Sarva Shiksha Abhiyan. All of that 58 rupees which are left with the union government, that will be used to do all the things in the union list, so which includes defense, foreign policy, etc., and all these specific purpose things which are actually, the scheme will be implemented by the state governments but will be designed at the union government level. So another point that we should be arguing about is, why are there so many centrally sponsored schemes? So why just reduce that amount? Automatically the money which is in this given to the states as a whole will increase, right? So I have argued earlier that there should just be not more than 10 centrally sponsored schemes, which we can decide are supremely important. Beyond that, all those centrally sponsored schemes should be stopped. Give the money to the states, let them decide how they want to spend.
Correct. So, and all these disasters and all of those things, that also comes out of this 58%, right? Defense, disasters, flood relief, all of that comes out of there, right?
So this again, disaster, etc. There is another complication. We are now talking about the consolidated fund.
Correct.
All this, but there are two other accounts of all governments, state and union, which I didn't talk about. But let's discuss that. There is a consolidated fund, there's a public accounts fund, and there is a contingency fund. So some of the money is parked in the contingency fund. It's a fund such that if anything were to happen adversely, both union governments and state government have some money reserved for addressing that contingency. Public account funds are funds where the government is just acting as a banker to the people. So all your small savings fund, your post office savings, there the government is not supposed to take that money and use it for its day-to-day running, right? So there it is kept in a public accounts firm separately. So this is principles of accounting, etc., where these are parked separately.
So apart from trying to reduce the union pool that they hold on to, which is quite a large, and getting the schemes down to bare minimum that is required and providing the money back to the states and say, hey, there you go. They could even collect it directly and reduce that whole thing and say, why do you want to give it to me? Keep it and then do something with it. That comes back to the responsibilities of the state. We need to pass a judgment. Are they doing a good job? Because there are not enough State Finance Commission reports that are out there. Hardly if you are coming out. Karnataka is still on its 5th State Finance Commission, which is due out in February. And do they have formulas? Okay, before that, that is discretionary, right? All of that schemes and other thing is discretionary. It's not necessarily timetabled and given out and decided this way. I mean, they will allocate it and say you can spend, but if you don't spend it, it all comes back to the union to do whatever it is, right? Comment on that and the states as well.
Yeah. So the schemes are designed at the union ministry level, right? Correct. So like I told you, Ministry of Health in the union government has designed NHM. So what kind of disbursement happens, when it happens, is all dependent on that ministry, right? So sometimes some ministries do better than others. Generally, they also have a formula like fund utilization is one big part of that formula. So some states game that well. They utilize the funds at very quickly, so then they get the next tranche of it very quickly, right? So this is you can think of it, it's like every ministry will have its own scheme, own way of disbursement, and own problems. So having so many schemes is actually you are going to have problems depending on how that particular scheme was designed, what were the terms on which money should be spent. So lesser they are, the better it is.
On the states, are they doing a good job?
Yeah.
What should we be doing?
No, states aren't doing a good job when it comes to federalism. Obviously, we know that, Satya, you know it much better than I do, that our local governments are all broken, right? In fact, all municipal corporations. So again, out of 100 rupees of, if Indian economy were 100 rupee, very roughly one fourth of that expenditure happens by all governments combined, state, union, local government. Out of that, like, so all the municipal corporations, municipalities, if you combine across India, the money that is spent by them is just 1% of GDP. That's how small it is. You can go and look at it in China. Right? Forget about US, etc. US does, we know about that, but even in China, a big chunk happens at that local government level, and we are not doing that. There was this constitutional amendment in 92, 73rd, 74th amendment, which tried to recognize this third level of government constitutionally, but there were, the revenue raising powers of that local governments were not decided. It was left for the state governments to decide which kind of revenue raising power should be left to the state. So some state governments moved property tax to local government, some didn't, some have kept it there. So it is all very oddly done, and that's why we are in a system where fiscally, that fiscal federalism part, political federalism has happened, administrative federalism has happened to an extent, but fiscal federalism at that local government level hasn't happened. So if we need more energy, we need to put it there, and state finance commissions are part of that, right? It all happens from this. No one wants to let go of their own power, so why does the state government give more money and make a Bangalore mayor actually powerful? So they don't do that. Most of the things in the city which should have been run by BBMP are actually run by state government parastatals, right? So which are controlled at the state government level. So that is where we are actually broken, and there's hardly any conversation about that. So
So
state finance commissions are formed. They are, by the way, not as, even Bihar has had five or six finance commissions. So it's not just about house, like whether state finance commissions are formed or not, but how do they decide? Do they have the capability? Unlike the union finance commissions, often state finance commissions have politicians in them, very less expertise to actually do this horizontal vertical devolution formula. It's not done systematically as the union finance commission does. So the big capability gap there, which we need to focus on.
So I've had a lot of conversations on that on this podcast. I'll link a few down in the show notes because public finance is a big thing in the municipal level, and we have to flip our imagination of raising revenues from the local level and what they are, other than property tax and ad revenues and some commercial taxes here and there. Majority of the cities rely on completely on grants. The amount of property tax collected is so little that it doesn't even make sense for them to spend the amount of time collecting those taxes. The extinguishability on the political side is extremely heavy with the 74th Amendment not having the right kind of provisions. It seems to be extremely stunted. The only thing is the administrative devolution, which seems to be very convenient for the state governments to do. And basically, cities have become just administrative devolved pieces without any political power or any financial power. There needs to be a lot more conversation, and that's one of the attempts. The last but not the least, your book Missing in Action, I'll link it in the show notes. Pranay, you wrote a nice book on why public policy, you demystified public policy literally and trying to speak it in common terms. Why did you want to write this book?
Yeah, so Satya, as you know, we teach public policy at Takshashila, so a lot of courses, our attempt is to address the other end of the policy pipeline, right? So most think tanks work to talk with the one end, which is politicians and administrators. We do that to a very limited extent, but our effort is to address the other side of the policy pipeline, which is citizens like you and me. Anyone who can read a newspaper should be more informed about these issues, and that's like the aim of your podcast as well. So the aim was similar, that we need to have a much higher level of public discourse, think beyond intentions, and think about policy design. Also think about we often say policy is good, implementation is bad, but that's a myth again, right? Policy should take into account implementation as well. So those are certain principles that we wanted to put out into the public domain. These are things we all should know. If we know how the Indian government works and why it doesn't work, we'll be able to ask better things from the government, right? Instead of just asking the government to intervene in every little problem that we have. So that is what we want to put forward to people at large. And been doing this newsletter called Anticipating the Unintended, which tries to do this on a weekly basis, share frameworks, concepts, ideas about public policy. And from that newsletter, the idea that we thought after 100 editions that we can write a book which tries to cover a lot of the things that we think about. And that's how the book came. It tries to use less jargon, a lot of commonplace ideas and stories from Bollywood, etc., to make the point about why public policy matters.
And that is my favorite newsletter, by the way. I read it inside out every time it comes in, and follow everything you guys do. And I think it's important for people to start knowing more and making an attempt to know more. I know it's expensive in time and effort to know more, but that's the only choice you have if you want to not fall in the trap of he said, they said. And I think resources like what Pranay has written in book format, or subscribing to his newsletter and watching the podcasts of some of the things that they recommend, not just mine, but many others, it's very important to keep yourself informed, because information is going to be your power. Knowing and understanding things will let you make proper decisions. And I'd like to thank Pranay for spending time in explaining this to us very easily and to the viewers. And I hope you guys take note of it and not just fall prey to somebody said this or somebody said that. You should listen to them, but you should also go back and cross verify and understand, is there more to this elephant than the leg that you are holding or that they are holding and showing you. Thanks a bunch, Pranay, again for coming on the podcast and explaining this.
Thanks for having me, Satya.